Joining us right now from India Infoline is Anirudh Mehta, who's a research analyst, India Private Clients at India Infoline, and he's with us right here in the studio. It's great to have you, Anirudh. Give us a sense, I mean, now that HCL Tech is out with its numbers, the stock has reacted up 4.5%. You think that's the max that it can go up to?
I think the results have been good. It has been much better than what Infosys has posted. Overall, the dollar revenues have surprised us on the upside. The margins have been more or less in line, but could have been better. PAT has been better. So overall, the deal signings have been very good. So the stock uptick that we have seen is pretty much vouched for. But going ahead, we need to see the valuations. I think the EBITDA margins are probably at the peak. So overall, there could be a limiter to the upside that one can see in the stock. We would change our estimates post the conference call, but currently our target price is about 530 or so on the stock.
Do you think there's going to be a churn within the IT pack in terms of the focus that Infosys gets as being an indicator of what the industry trend might be? With Infosys disappointing this time around, HCL Tech outperforming, if we see good numbers from TCS as well, will there be a sense that Infosys doesn't really determine, even in a challenging market, how things will shape up, and that you have to wait on for the other ones to actually come out with their numbers?
Yeah, that is happening since last couple of quarters. Infosys has not been able to, reach its guidance, or it has underperformed it to a certain extent. So in such a market, there has been a deviance from what it used to guide and what is happening vis-a-vis what now is happening for other players. There is a clear divergence. Also, there could be a churn between the IT stocks, considering what Infosys has done and what HCL has done currently. The weightage for the stocks for Infosys also reduced on the index. So the funds that follow the index would probably have a high weightage for the other companies also.
Anirudh, you brought that point up that the highlight of the quarter has been the number of deals won during the quarter. And also, how do you look the rate at which this company would be able to manage deals in the kitty? How do you compare it to some of the other ones? There are reports coming in that Wipro is also chasing some large infrastructure deals. So going forward, how do you compare the two?
So there are two things to that. Currently, the most important factor that we see is the revenue visibility that a company has. With HCL's $2.5 billion of deals in the last 2 quarters, it has fair amount of visibility, which is a positive for us. It has a good exposure to IMS, as you rightly pointed out. Wipro as well has a good exposure to IMS. And in the current environment where there are cost takeouts that are being happening with the clients, these kind of services like IMS is gonna be show good growth. So companies with exposure to these services should give good growth. For HCL Tech per se, we expect about 12 to 13% of revenue growth for the next 4 quarters. So that is how it will pan out. Vis-a-vis what we have expected for Infosys is about 8% currently.
How did you view the company posting a EBITDA at 11 million on the BPO front that has actually turned around? So do you think that this could actually be a lever on the margin front going forward if it continues to improve?
So yes, the BPO performance was as expected. The BPO has turned positive on an EBITDA level, and it should be a lever going forward for the company. But considering that it's still a small portion of the company's revenue, it will to reflect on the consolidated margins, it will take some time.
Given what HCL Tech has done, what is your expectation from Wipro now?
Wipro, we expect a similar amount of growth, around 2 to 3% of dollar revenue growth, in line with what it has guided for. Also, there would be some kind of downtick in the margin, considering there is a large amount of hiring that is happening at the company. So we expect about 100 to 130 basis points of fall in the margins for the company.
What are your preferences as far as the entire sector is concerned in terms of investment call from here on, and what's the pecking order, say top 3?
I think we are positive on IT, but there would be picks from the sector which will do good. Clearly, Infosys is not doing good currently. The visibility it has for the next year is also dim. So currently, our pecking order is Wipro, followed by TCS and HCL Tech, and then lastly by Infosys.
Anything from the mid-tier lot that you like right now? I mean, we are already seeing a fair amount of outperformance coming in from Hexaware. What would you bank on?
Right. So Hexaware is not really in coverage, but we think Mindtree is doing really good. We have it in coverage, and the results posted by the company yesterday was pretty good. The volumes have been pretty good, much more than expected. The management commentary is much more positive relative to what we heard from the larger peer. So we continue to be positive on Mindtree from the mid-cap space, and we have a buy on that stock.
So Hexaware, HCL Tech is yet to host the conference call. What are some of the things you would be watching out for as an analyst, which would actually force you to rework your numbers, or some guidance which you would be watching out for?
So the employee addition at HCL Tech has been tepid in the core software. It's flat quarter on quarter. The pricing is not so is a bit tepid also, about 1.4%. There is about a fall in the pricing. So we would see clarification on this particular things with regards to results, as well as for the industry. We'll have clarification regarding the financial industry, BFSI space, where Infosys has been having some kind of headwinds. Also with respect to discretionary spending, what is the view of the company going forward? And also regarding the deal wins that the company is, deal pipeline that the company is facing currently.